everybody, what's up? We are back with another stock analysis, and today we are looking at Palantir. So Palantir does software primarily for the government as well as a couple commercial applications, but they do security software, cyber threats, things like that they take care of. So very important company, massive growth recently. They've been talked about a ton. A lot of eyes are on them at the moment, and I'm going to be going over their recent financial performance, looking at some key things with the company, and just seeing if they're a good stock or not, basically, which I believe we already know the answer to that. But if you want more information, make sure to like, subscribe, let me know in the comments what companies you guys want me to review. I try to do these reviews as much as I possibly can. But yeah, let's get into Palantir. So this is the entire chart for Palantir going all the way back to 2020. But if we look over the past year, they have seen explosive growth, primarily driven by really solid earnings reports, massive outperformance on their part. And they're actually planning on releasing a new earnings report in about a week. So definitely a lot of eyes are going to be on that. Make sure to pay attention for when that comes out. But I'm just going to be doing a general update before that comes out, just so we know the current financial state of the company. So tons of growth. They really weren't affected too much by the downturn in the market. You could see they did drop from right around 120 to around 75. So actually, that is a massive difference. But now they're all the way back up to 112 at the moment. They had 2 weeks where they were up almost 20%, and again, just over 20%. Nearly back to back with a little bit of a stutter in between there where they were still up 6% almost. So tons of momentum happening, a ton of hype around the company. So a quick update on their last earnings report. Palantir shares were up 25% plus pre-market following a pretty solid beat. Customer count is up 43% year over year. 129 deals over $1 million were closed. Guidance was again well ahead of the consensus. Analysts leaned constructive following the results driven by significant demand. Several acknowledges their strong execution and AI potential. Multiple analysts raised price targets. So if you want to look at the analyst specific comments here, you can read through this. I'm not going to read through everything, but looking at the price targets, it's pretty crazy. Target raised from $11 to 40, raised from 44 to 80, 90 to 120, and then maintains underperform actually. Wow. Notes that despite guidance, it fell short of their CEO's aspirations, which that just seems ridiculous. Points to outperformance in the stock despite shortfall of the 3-year ambitions. Again, they're still outperforming. I don't understand that. Acknowledges notable momentum, remains cautious given the significant premium to peers. So that is one concern that I have with the company, is that when you look at how much they have grown and you look into their financials, which FactSet was just recently updated, which is the platform that I use. So finding specific things is going to take me a moment. But if we look at the competitors, let me see here. Where do I find PE ratios? We will go to the comps analysis for that, because honestly, the new update is going to take me a bit. But looking into their competitors and the analysis of those, Palantir has a very, very high price to earnings ratio, which we could see right here. For the next fiscal year, it's estimated to be at 204. If you look at their competitors, including Salesforce, which used to be notorious for having a very high PE, is now much, much lower than what Palantir is at. So they have a forward fiscal year PE of 204. It is supposed to be reduced next year, but still incredibly high. Generally, companies that have a PE higher than like 30 to 40 are considered overvalued, or rather like you missed out on the growth, basically, is a good way to look at that. So considering Palantir is at 204, yeah, they're significantly overvalued. So saying that, it does make sense why one of the analysts here are concerned, and I think most people share the same concern. But saying that, let's head into the actual raw data financials now and start going over everything. So first of all, To address some of those concerns about the valuation, their profit has doubled year over year in 2024, actually more than doubled, which is good. Sales are seeing a ton of increases. Their operating income went from 120 million to over 300 million. So again, massive increases. So are they growing into that valuation? Yes, but at the same time, I think no matter what, there has to be some kind of a reach back down towards more favorable valuations. So that kind of happened when they were at $60 to $70 a share for about a couple days. Let's actually see. They were in a bit of a 90 to 70 trading range for a bit. I would say that the valuation is a little bit easier to swallow in this range, but even still, it is very, very high, which is concerning. If we look at their total shares, they are increasing every year as well, which I believe this will probably stop very soon because they are now profitable for the past 2 years and they are seeing significant growth there. So they most likely won't be getting capital from selling equity anymore, if I had to guess. That could still continue, but in my opinion, it probably won't. Moving on to the balance sheet now, looking at what is going on with their assets once this wants to load for me. So cash is at 5.2 billion. Almost all of their assets are in cash, by the way. Everything else is fairly minor, which is fine. They do software, so it's kind of to be expected. Looking at their liabilities, very little debt compared to how much cash they have, which puts them in an excellent position financially. And other than that, I think we could just keep moving through here. So getting into the cash flows now, we could see again their net income turning positive in the past few years. That should be fantastic for the state of all their cash flows. And we're seeing that with the operating cash flow seeing massive increases over the past 2 years. Investing activities, you could see a lot of investments are being purchased, which is long term for this company, most likely a very good thing. And hopefully we can see that continue as long as they're seeing growth from it. One thing to note, though, the change in capital stock, they are, again, actually increasingly selling off their stock over the past 2 years, especially. Now, to be fair, with their enormous valuation, this honestly isn't that bad of an idea. They're massively overvalued. Selling off their equity will probably benefit them so much to the point where they don't have to sell a lot in order to make a ton of money. So, for example, here they made almost $700 million selling equity. Now, what's going to happen with that? Not sure, but it's probably a good time for them to take advantage of their valuation. So overall, I would say that that kind of dilution of their stock isn't really that bad of a thing. And then finally, looking at the free cash flow, again, very strong growth over the past few years. Um, Looks fantastic. All the growth looks fantastic. Let's move on to the ratios now, and then we will wrap it up for the day. So looking at their margins, beating their 5-year average with gross margin and net margin, ROA, ROE are both much higher than they used to be. They were negative for a few years. So any positive here is awesome. And I'd imagine this will only continue to accelerate. You can see there really isn't a ton, like other companies will have like 20-30% return on equity. Right now, Palantir does not have that. And that does kind of highlight how overvalued they are because generally the return on equity will be a lot higher when you see returns like this company has had. But it also hints towards it will be much higher in the future, which could be a good thing. But also, I still think the valuation needs to come down. So wrapping up with just the debt to equity, which we already saw, they have very little debt. It's at under 5%, which is nothing. No concern with the debt situation at all. So, saying that, wrapping it up for today, I think Palantir is a very solid company, excellent financials. The only concern is the valuation. I think they either need to go flat for a while and grow into their valuation, which could happen within a year or two, possibly, depending on how strong their sales growth is. But overall, I just can't see the company maintaining this kind of elevation for very long. Just because of how things are looking. The PE ratio at 200 is very concerning. Now, there have been some success stories with high PE ratios, but a lot of those companies are kind of coming back down now. One good example is CrowdStrike, which if we just put it in here, you can see they are in the exact same position. They also have a massive PE ratio, and they're also, again, reaching back up towards their all-time highs. This is another very similar company that I think will start heading back down, very similar to Palantir. But just gonna have to wait and see what happens. This next earnings report could be massive. They could send it even higher. But we'll just have to wait and see. So May 5th, mark your calendars. Make sure to keep an eye out for Palantir. That's all I've got for today. Thanks so much for watching. Make sure to subscribe. Share this video with every single person you know. Tell your mom to subscribe because trying to get to 1,000 subscribers before I graduate college. So let's make it happen. And thank you very much.